for the county supervisors yesterday because we still have so much more work to do.
All right, we're going, my friend. We are streaming.
Streaming.
Pause that music there. All right, we're good. You're live, my friend.
About time. Feel alive.
All in favor, please say aye.
About time.
Aye. Motion carries. Items 9
All right,
through 11.
hold on.
I'm trying to get to the thing that says that we're live.
Does anyone
Let's
need
see what else I got going
staff
on here.
report or more information at this time?
I just, on the T2050 performance measures, would love to
come
see
on,
if we could
computer.
have one for street sign replacement.
Don't fail me now.
Interested people in my district. They would love to see
Don't fail me now.
progress towards replacing those street signs with things that
All right,
are
we
easy
should be
to
live
read,
on
and
Facebook, my
there was
friend.
some news coverage as well. But it is not just my district that is interested in that particular item.
They're pretty sad.
We have opportunity.
All right, there it is. There it is.
Okay. Hearing none, we will go to item 12,
All right.
which is the downtown light rail.
Today's
library
topics:
station.
trouble with Equifax. Oh yeah, Equifax. Heard about that? Yeah.
Madam Chair, thank
Yeah,
you.
we're gonna talk about that a little bit.
On this item is Albert Santana, Director of High Capacity.
That's a big deal.
Joined
That
by
is a big deal.
Director and Ray Dobalina, Street Transportation Director, who have all helped and worked together to bring this.
Talking about some major real estate news
for,
today.
for the downtown light rail connection. So I'll turn it over to
Equifax
Thank you, Mario, and Chair Williams, members of the subcommittee.
and some
We're,
info
very excited to bring you this
out
item.
there.
I think that this is something that really helps to build upon
renting better than buying.
the investments that we're making in transportation.
Some,
and all roads and
yeah, I'm not gonna give it away.
But something specifically that is going to hopefully help support
Yeah,
the positive
renting
momentum
better
in
than
the future,
owning.
Development activity in the downtown Phoenix area, and how transportation can play a vital role to support.
What do you think, Stephen?
So,
Renting better than owning?
this presentation
Never.
really
Well,
goes to speak
if you're renting a
to,
car
as you all know,
for
we've had
like a
lots of
trip,
great things going on in downtown Phoenix with lots of people,
Yeah.
because you don't want to buy a car while you go there.
city,
That makes
lots of
sense.
jobs being created. Of course, the success we've had
Um,
in major special events like Super Bowl and the NCAA Final Four and
So much more.
World championships and many special events, as well as lots of economic development. And we know that in transportation, that transportation is a key part of keeping those,
Sent to the
events
page
coming to
admin
Phoenix
for
area, as well as
approval.
keeping, people's ability to relocate, work, and live. in
Hashtag real estate podcast. Hashtag real estate show. Hashtag 22 AZ. Hashtag real estate news. Hashtag Equifax. Hashtag renting versus buying.
That we were able to accelerate some of our future corridors.
Hashtag.
We were able to accelerate that project from 2034 to 2023.
Yeah, I may have to change this. This is Phoenix TV here, but I may have to change that.
Yeah, so not as exciting as it was a couple weeks ago
Wow.
when we first started this sharing. So what we're doing, everybody, is while we're sharing our part of the show, because it takes us a few minutes to share, we gave you a live stream of what's going on in Phoenix. Apparently it's this guy. Looks like a Jeremy Renner, kind of,
Apparently, it's
with
this
a
guy.
short jacket, big sleeves, big tie. All right.
Because as we started to think about all of these
Oh man,
off of our main
too
line
much.
that we've now had in
Aren't you glad I'm back?
2008,
Aren't you glad I'm
to
back?
make sure that we were looking
Who's
at
glad?
this from all
I'm
the
back.
Dun,
in the
dun,
saddle
dun,
again.
maximizing
Dun, dun, dun,
in the city of
dun,
Phoenix,
dun,
among
dun, dun.
major metropolitan areas. We don't
That's my
have a natural
spin-off of
union station or a
Michael
major
Jackson.
area where all trains
There you
can come in and all trains
I'm
can
glad.
go out to
I'm
the
glad.
destination
You know it.
And also we want to make sure that as
Oh, Weird Al Yankovic.
Oh yeah.
coming into the core
Yes.
part of our city, that we weren't having
All right.
major
Let's see.
I'm just sharing right now. Everybody else is sharing. Hopefully, if you're watching this, you can share too. We're gonna have a great show today. We're gonna be talking about real estate news. The good stuff starts in 6 minutes. So if you're watching this after the delay, you can fast forward till this timer's down. You have 22 minutes of show, but that 22 minutes doesn't start until after these 10 minutes of sharing gets out there.
Yeah.
Correct?
Yes.
Someone reached out to me yesterday saying, I looked at your podcast today and I didn't see it. We didn't have a podcast yesterday.
extension.
No, we didn't.
So he was right.
That might encourage.
But it's nice when people reach out to you and say, "Where's your show, man?"
Yeah, yeah, that's awesome. That is awesome.
It means we're doing something right, or they got nothing else going on. Just kidding.
Awesome sauce.
Awesome sauce. And how's your sharing going?
It's going good, man. It's going good.
So the red line would show you kind of an east-west type of an extension that would go from the East Valley.
A lot of sharing and resharing of 9/11 stuff yesterday.
West towards
So.
the state capital area.
Yes.
The green line would show you the north.
Do you remember where you were? What you were doing? Were you in the military?
Up to the Metro Center Mall.
I do remember.
Represent the Tempe streetcar, which
And
is under construction now.
I will
The
tell
circle
you,
in the middle is what we're talking about, this
when we do our
intersection
tweet
where
quote
all
of the
our
day, my
right
friend.
extensions all come
Oh,
together and have this
snap.
particular
Spoiler alert.
So
Back off.
the next slide
Back off.
is a graphic
Back
that
off.
shows you
Beep,
what
beep,
Lifestyle looks
beep.
like today in downtown.
Back
That's
it
me
up.
backing off.
With our
Back it up.
extensions coming down Washington and Jefferson.
All right, so I'm here. I think I'm ready. I am done sharing, so I'm gonna just hang out and watch whatever this guy's talking about. This is a hold on. This is where I look at it and I follow along with everybody. Dang, I missed the graph. I just missed the graph.
And then a station serving our sports arena complex, and then a station near our Symphony Hall.
All right, downtown Phoenix light rail configuration. Is that what that is?
Into Central City South and South.
This is good stuff.
We do
Yes.
have the lines coming in on Central and First Avenue. And one thing you
Central and First Avenue. The map it's neat because I can kind of tell it's a city, but there's no way for me to read the numbers.
into the downtown. We are adding very important lines that do connect communities that need transportation.
So looking at the Phoenix Transit for 2050, the year 2050,
Stations. And then
well, most of us think we'll be in the Mad Max kind of reality
red line, bless you.
of big cars and fighting for fuel.
Going from the downtown area out west towards the state capitol. Now this extension has two planned stations near the areas of 3rd Avenue in Washington and 3rd Avenue.
I got
All
this
right.
new computer here, man, and it's
all of these lines. Well, from an
giving me a little bit of
independent
problems
perspective,
here.
they might work for their corridors, but as they all culminate in the downtown area,
Got coffee, got some water.
from a passenger experience perspective, if an individual, for
Coffee
example,
and water?
wants to go from the warehouse
Doctor says no more Mountain Dew in the morning, so
to the airport, which we know through modeling,
I got that going for me.
they would have to come up to
That's
around
probably a good
Central
thing.
Adams Station and then make a
Right.
multi-block commute
Yeah, that's funny.
to the station.
All right, guys, we're about 2 minutes away from the show starting. This guy here is nodding, talking about the year 2050 and what the rail system is going to look like. I like his tie, but I feel like he's wearing his dad's shirt.
On that extension, you would get off
What do you think?
on 3rd Avenue, and the existing plan get off on 3rd
Yeah, it's a little big.
Jefferson, then have to walk 3 blocks to get to
Maybe it's just tiny hands.
to the south. So that's some of the stuff that really
I think you're probably right,
get our
man.
wheels turning as to how can we make
A little bit of both. Big hands, or tiny, big shirt,
multi-block
tiny
routes,
hands.
especially with
He seems like a nice guy.
not getting to the right extension. And two, we want to make sure that we have easy transfer, especially when
That's
He's
always
wearing
the
like a-
comeback,
he's wearing-
right? He seems
Yeah,
like
he
a
looks
nice
like a nice guy. Yeah, nice hair. But the guy behind him is wearing shorts and
showing alignments going up
big black
Central
socks.
Avenue. So when you're coming from the Capitol,
Meanwhile, this guy's wearing a
and on
nice
Central Avenue,
tie and jacket.
we have our existing alignment. We utilize
All right, we just
Central
got
Avenue.
about a minute left
South
here, and we'll
Central
get things
corridor also
going here.
proposes a north-south using
Yeah, I'm
Central
just,
Avenue.
just chit
What
chatting.
does that mean? That would mean that we'd be having trains possibly on Central Avenue.
Can everybody hear this guy all right? Do you guys want us to turn this up before we get started? Does anybody want to watch this guy? Let me do this here.
Disruptions from the automobile perspective, especially
He's almost done. Almost done.
Looks like he's about ready to talk himself to sleep.
Camelback. So again, this just gave us more reason as to how we need to take a step back and figure out now that we've got this great opportunity. We're in South Central.
I wonder if this guy knows he's nailing it. He's nailing it for our show.
Let's really
22
start
minutes.
looking at how we can make sure that we're trying to propose some solutions to that. This slide here kind of zooms in.
Oh, another slide before the show starts. Get it up.
This
All right.
issue, which shows how the system would look if we made no modifications.
Current plan downtown.
Coming into downtown.
All right, I think
On
we'll
Jefferson, as you're heading eastbound,
get things started
we're
here
looking
in
at
about
a left
8
turn,
seconds.
a 90-degree angle turn onto Central Avenue through the middle.
I'm ready.
There's switches across 3 through traffic lanes.
All right, here we go, man.
Vehicle traffic. It also will have South Central come.
Hello, everyone, and welcome to this episode of 22 Minutes with Jason and Stefan. I am Jason Bates, and I'm going to bring you the lender side of things. And, of course, the applause is not working. There it is. That was weak. There it is. Now we're going. And he is Stefan Cotton. He's going to bring us the realtor side of things. And then, of course, we together not only hope to entertain you, but also bring you the valuable content that you can actually use when you're looking to buy, sell, refinance, or invest in property in the state of Arizona. If you're looking to do any of those things, please reach out to us. We would love to be your team of choice. So please reach out to us. We'd love to hear from you. That would be awesome. We've been on vacation, so for all of you who are new to the show, thank you for watching this show and over all the other shows that are out there or content that's out there. Facebook Watch is out there, right? Facebook Watch. If you haven't seen that, Facebook has some TV shows that they kind of put on there, which is kind of cool. Thought that was kind of cool anyway. But there's a lot of video content out there, so we do appreciate you spending time with us as we talk about real estate and all things related to real estate in the Phoenix metropolitan area and really across the country for the most part. Because what's happening in, well, not all parts of the country is kind of the same here in Phoenix, I suppose, to some degree.
For the most part, yeah.
Yeah.
Minus the flooding or the fires.
Yeah, exactly. That's exactly.
A lot of fires, a lot of flooding. Other than that, we're just as like you.
Yeah, exactly. Hey, we always do a tweet quote of the day, so let's get to that because we got a lot of news to cover. I know it's not Monday Newsmakers, it's Tuesday. However, there's been a lot of news over the past week and a half or so we want to cover the top newsmakers. But before we do that, let's get to...
I don't see the counter yet either, so I don't know where we're at.
I've got a new counter. So the counter is not on the screen anymore because I thought, well, it's kind of distracting maybe a little bit.
Oh.
We're at 12 minutes right now, so I'll keep track of the time. And that way it's not on the show. All right, cool. All right, here's Stefan mentioned in the pre-show about yesterday being September 11th, a day that we will never forget as Americans, of course. Very tragic day in our history. And you asked Stefan, hey, where were you when September 11th? Do you remember when September 11th, 2001 hit, where you were at? And I said, yes, I do. I was actually at home, and then I went to work, saw the news. Obviously, it was all over the news or whatever. And I was kind of numb, to be quite honest with you. I walked into work, and work said, hey, man, we're done. Go home. There's bigger issues going on right now. And so I went home, and it was really eerie, man, because it was really the next day, especially. Yeah, September 12th, it was super quiet, and like probably similar to what it is when you evacuate a city through these hurricanes or whatever. Very similar.
Oh, it was, and I wrote about it on my Facebook post. I wrote about how like there's no planes. I mean, so we're so used to hearing a plane in the background. There's no planes. Yeah,
no planes, no cars. It was very eerie, not seeing the hustle and bustle. Looks like one of your buddies is on here saying, hey, BW Yarwood.
Bruce, he was the dad of the year, I believe, or world's greatest dad. I know this because he had a t-shirt that he'd wear on Fridays that told me. So hey, Bruce, hopefully you're still rocking the world's greatest dad shirt or hat or whatever it was. Maybe it's a coffee mug. I don't know. But I remember that about Bruce. Yeah.
Nice. Well, thanks, Bruce. This is one of the ways that you can participate in the show. So if you have any comments, you can certainly write them on the post, and they will show up down below here. Hey, we always do, well, we don't always do, but today is Tuesday, but we're going to cover the top newsmakers. So let's dive into the newsmakers. All right. So before we get to the buy versus rent, I wanna play a video here. Equifax is in some deep trouble. right now.
Right. Right.
I thought I saw on a report this morning 148 million people and their credit could have been compromised, or their personal information could have been could have been compromised. That's huge. That is huge. And there's still not really, I'm not seeing details as to who did it. Is it Russia, or is it China, or is it some
the Democrats, the Republicans?
Yeah, right. We haven't heard that yet, right? But I'm going to play the video that's straight from the CEO of Equifax. It's about 2 minutes long, and I think it's worth watching for the 2 minutes because it is such a serious issue. So let's get to it.
As you're probably aware, earlier today we announced a cybersecurity incident that has impacted those who rely on us to protect their personal information. I want to take a few minutes to talk with you about it and make sure you have the facts. Most importantly, I want to let you know what we're doing to help those impacted by this event. On July 29th of this year, we discovered that attackers had gained unauthorized access to certain Equifax data files. We acted immediately to stop the intrusion. We promptly engaged a leading cybersecurity firm which has been conducting a comprehensive forensic review to determine the scope of the intrusion. We also reported the event to law enforcement and continue to work with authorities. The unauthorized access occurred between mid-May and July. I'm pleased to report that the review found no evidence of unauthorized activity on our core credit reporting databases. This is clearly a disappointing event and one that strikes at the heart of who we are and what we do. I deeply regret this incident, and I apologize to every affected consumer and all of our partners. We all know that the threats to data security are growing by the day. And while we've made significant investments in cybersecurity, we have more to do, and we will. This incident is a test for all of us at Equifax. It tests our values, and it's a test to our resolve. I know you'll all agree that our first priority must be to support consumers. To that end, we're taking an unprecedented step of offering every U.S. consumer in the country a comprehensive package of identity theft protection and credit file monitoring at no cost. We also opened a special call center and launched a dedicated website to provide consumers with information they need to manage their personal situation. We're also reaching out to our business customers, regulators, and other government officials to brief them on the situation and our ongoing actions. Today is a humbling experience for all of us. Equifax will not be defined by this incident, but rather by how we respond. Together we will serve our customers, support consumers, and strengthen our data security capabilities. In the process, we will build a stronger company with many great days ahead. This is my commitment to each of you and to all of our valued partners. Thank you.
Yeah. Okay. I got some issues with this guy. I got some issues.
Well, I like how he said, let's start with the facts.
Yeah.
And then he should have said the Equifax. I wish he would have said that right there.
Yeah,
that would have been best.
The Equifax. Hey, Ruby. Hey, thanks for joining us today. This is a show about real estate. So if you're interested in real estate, this show is all about real estate. Okay. First thing, he mentioned July 29th. What month are we in?
September 12th, I think, since we,
Why are we just...
So when did that come out, though?
This came out 2 days ago. That video came out 2 days ago. They knew about the breach since July 29th, did nothing, didn't notify customers, didn't notify anybody, hired a whatever to try to cover up, really, in my opinion, what had happened. And that's where I've got the problem. It's like, look, man, this is serious. This is people's credits. You're managing people's credit reports, or credit profiles, if you will, not their reports necessarily. And as soon as something happens, transparency needs to be paramount in these situations, in my opinion. I saw today too that they have, I guess Equifax sold to another company or something like that, and there were some golden parachutes that were a part of that too.
Oh.
So they didn't spend money on security, but they spent money on salary.
Right.
You know, I don't know. Maybe I'm being a little too critical, but I'm tired of hearing this. We all know how critical it is to protect your personal information. My wife has had her identity stolen.
Well, how do you feel about the identity protection that they're offering for everybody?
I haven't looked into it. I don't know how thorough it is or who they're partnering with on it, but you know, I was having a conversation with my wife this morning. You know, we probably are going to, you know, contract LifeLock or something like that. Not saying that they're perfect, but
right.
Something's better than nothing. It's kind of like locking the doors on your car. It kind of deters some people, I suppose.
Yeah, right.
But it boggles my mind when you're dealing with credit. That is your business, and you can't protect it. Like,
right.
You got to be kidding me.
Well, listen, everybody's trying to break into everybody. I mean, that's, if you're out there in the cyber world, don't think that you're safe. I think this is the #1 lesson. Yeah,
absolutely. Okay, so the next story here, as the illustration presents here, buy versus rent. So the headline reads here: Congressman wants to make renting better than owning. This baffles my mind. I can't believe people even like think of this, especially elected officials. And as amazing as that sounds to those of us who believe owning is better than renting, New York Representative Joseph Crowley, which I don't know, that sounds like a bad word there.
Crowley or Joseph?
Well, Crowley.
Oh, okay.
Alistair Crowley, I guess. I don't know. Mr. Crowley. Okay, is introducing legislation that would give superior tax breaks to renters. While owners get a deduction for mortgage interest and real estate taxes, Crowley's bill would give a tax credit to renters whose rent is more than 30% of their income. Isn't that like 90% of renters? That would probably be most renters, as the article says here. If it follows typical IRS regulations, renters could actually get back from the IRS more than they would have paid in taxes. He is a Democrat. I guess this article is a little biased or whatever. So this bill has little chance of even getting out of committee since Republicans control the committee process. Seriously, guys?
Well, it's an interesting idea. Now, this is interesting. When we say rent versus buy, if you can get a tax credit and you can get tax income, and there's a few comments here that I want to talk about from that last little bit that we talked about. Yes. But I think if you can get a tax credit for renting, then that tells me I need to buy more houses, because then I can put more renters in there, right? I mean, it's a win. If it's a win-win, then that's good. But people right now, you can't get approved unless you make less than 1/3 of your paycheck goes towards your rent. You know, and it's not your paycheck; it's your gross. But it looked like I think Brian wrote right before Bruce did, that said it's a 2-step process to get this LifeLock type of scenario that they're offering. They're offering it. The Equifax is a 2-step program. The other one, the second step, isn't even out until tomorrow, so maybe we could touch on that next week.
Okay.
When we talk about the Equifax steps, or maybe even on Thursday or Friday with our question and answer episode, like how do you protect yourself?
Yeah. No, but doesn't it seem like this is like, I feel like I'm pulling teeth, man. Like, are you kidding me? 148 million people? 148 million people are compromised, and this is like a slow rollout. I mean, I know they want to do it right. I get it. But man, like you mentioned.
I'll tell you this, like, I don't take things seriously until it gets to 150 million. So I'm okay with it.
That's the bar.
Yeah, that's my threshold, my own personal, like, when I had like my cholesterol checked or something, they said whatever this number is, anything above that, then we worry. And I was like 2 points below that number. And they said, well, we need to have a talk. I was like, I believe you told me I don't have to worry about it until it's above that number. So I'm good, thanks. But
I'll have a couple more Bruce, tacos, please.
Tax liens are great, and I'll love to talk about tax liens. We do a question and answer episode on Thursdays.
Yeah.
So these questions, Bruce, on Thursdays is a Q&A. So we'll talk about tax liens for you on Thursday. That's cool.
All right.
But I'll tell you all about buying tax liens.
Next topic here: why banks will continue to lose mortgage share. I don't know. Banks have, since 2008, have lost a lot of confidence with the American people. And as a result, some banks have even said, hey, look, we don't want to get in the mortgage market. We don't want that business. We'll take it, but we're not actively pursuing it because of the CFPB and all the regulation that goes along with it. You kind of draw attention to yourself if you are accumulating a lot of mortgage portfolio, if you will. A lot of banks want to kind of fly under the radar right now, so which is kind of hurting them, but it's, I think, good for the consumer, quite honestly, because you get better service by not going to the banks. Previous generations visited their banks at least once a week. Not so with millennials. They only visit their bank once a month. I don't even know if they visit at all. With online and everything like that, banks are almost
direct deposit, debit card.
If they visit at all. The largest percentage say they never visit their bank. There you go. Some of the most popular banks with millennials are like Ally, have no branches whatsoever. So there's the virtual kind of banks like Ally Bank. The bank is not a place where they have built significant relationship. On the other hand, massive advertising by companies like Quicken and SoFi and have changed the thought process of younger people regarding where to get a loan. It's a great opportunity for non-mortgage bank lenders. So seems to have shifted, right? I know my grandparents, they knew their local banker.
Right.
That was not that long ago, really, in the grand scheme of things. So it's come a long
Time
way.
flies,
Yeah.
You had to wear a tie. Remember, you had to dress up. You're trying to get a loan.
Yeah, exactly. You had to wear a tie to fly on an airplane. No, you don't.
Remember the wedding singer with Adam Sandler? He goes to the bank for a loan.
Yeah.
And Kevin Nealon's the banker.
Yeah.
And he says, "Well, why do you need loans?" Like, "Well, I like money. I want some more of it. You got some, so I like to, or whatever." It's like, I'm a material girl in a material world. Yeah. But yeah, that's what I went to.
All right.
Back in the 80s. Anyway,
all right. Next one here. Obviously, we've had some natural disasters hit our country here. Houston in particular, 4 feet of water. My God, I mean, that's crazy. So FEMA legislation may increase premiums for flood-prone homes. Now, this isn't so much here in Arizona. You don't think of Arizona as a flood zone, but there are flood zones here. My personal house is actually in a flood zone. Brock Long, the administrator of the Federal Emergency Management Agency, FEMA, says taxpayers can't continue to pay to repair homes that keep flooding. The federal government spent $357 billion on disaster recovery in the past 10 years, with 2016 being the second worst year. I imagine 2017 might be the first or the worst year. The government has had to fork out twice what they did to bail out our Fannie and Freddie Mac, with premiums not beginning to cover the costs. It will all be coming to a head in the next month or so, as the program will need to be reauthorized. So if you're in a flood zone, I suspect your flood premiums are probably going to go up.
Well, plus I think they might even re-expand the flood zone area, right? So what if your house isn't in a flood zone but you got flooded? So now they're going to recompass that map and then charge you more too.
Yeah, plus insurance, right? Homeowners insurance. I mean, I'd be curious to see, like, are our premiums here in Arizona affected by what's happened in Houston or Florida?
Yeah.
I'd be interested to see that. You know, spreading it out across the country kind of thing. I don't know.
If everybody pays $1 more a month or something.
Right.
Even
exactly.
$5 more a month.
Right.
Yeah.
It'd be interesting to see. All right, so next one here. It's all about the rate. It's all about the rate. Some people, you know, you talk to loan officers, they don't really care about rate. I do. I care about rate. Some realtors don't care about rate. I got an interesting story about this too that I'll share. It's all about the rate is the headline here. Surveys have produced conflicting conclusions when it comes to why borrowers choose a particular lender or broker to originate their loan. Most recent surveys put customer service ahead of rate versus price. A survey by Free and Clear, a company called Free and Clear, says it's all about the rate and nothing even close. Sometimes one must wonder what the questions were that produced such divergent results. If you asked a borrower, who would you choose to originate would you choose an originator with a shady reputation if they were offering the lowest rate? You may get a different answer if you'd ask that question in that manner, if you will. So they're kind of questioning how they arrived at that. I think consumers, rate, it's a big deal. I think rate is a big deal. Give you a little story. I had a realtor last week who wanted to refinance her house. Never met this realtor before in my life. She got referred to me through an investor that I know. She went to one of the big banks. I quoted her something that was very, very similar to the big bank. It was off by 1/8% or something like that.
Okay.
So it wasn't quite the best rate. But she got quoted a better rate through Wells Fargo. Her situation, though, was delayed financing. I don't know that Wells Fargo is too versed on delayed financing and the rules associated with delayed financing. So I suspect she'll run into some problems. But I asked her a simple question. Do you refer your clients to Wells Fargo, to the big bank? And she said no. I said, why not? If they have the best rate, why aren't you referring your clients to the... She's like, because they don't provide good service. I'm like, well, but you're going after the rate, but you refer your clients to somebody else and who doesn't necessarily have the best rate. So whose interest do you have in mind here? She didn't like that. So I guess I'll be doing business with that realtor.
Right. Well, the other thing is, Wells Fargo has a history of taking longer to close on a loan, or has a higher contingencies or like overlays or something, if you will. Yeah. You need a higher credit score than you do with someone else. That listen, it might cost you 1/4 of a point, it might cost you 1/8 of a point, but we'll get the loan done, and we'll make sure that you get the house. At the end of the day, and when you ask me about interest rates, I would say affordability. If I can afford a $1,200 a month for a mortgage payment, then and it's a house that I want to be in, I'm going to spend that money or more renting that house. Here in Arizona, our rents are higher than our mortgage. So for me, the rates are. I always ask my client if it's more important or what's the most important, because I have an app that kind of calculates it, kind of gives them a guesstimate. Look, this is $1,150. You said $1,200 was your highest. This house, this situation with this interest rate is less than what you wanted. But then we also offer the 0% down programs, the down payment assistance programs, if you will, where you don't have to come in with anything but $1,000, right, or $500 or whatever. That interest rate's higher, but they can still afford it, right? So maybe their $1,200 a month is maybe $1,300 a month now, but they came in with $1,000 down and got $800 of it back or something. Right. So this is a good debate, service versus interest rate. I think it should be affordability. I mean, you're gonna let somebody treat you badly to save $20 a month?
Well, it's the same thing too. Like a lot of loan officers will look at it, a good attorney versus a public defender kind of thing. You tend to get what you pay for in some cases, and when it comes to real estate, the biggest investment that you make, not saying you should overpay an interest rate, not saying that at all, but an 1/8% to have somebody who has the expertise, who will answer the phone after hours, who will do the customer service things that you're going to need, because it's a nerve-wracking process as it is, that's worth something, right? It's, in my opinion, it's worth something. It's buying a polo shirt versus a knockoff shirt or something like that. Quality, it's a trade-off. Yeah. Some people, want both, and you can't always have both, unfortunately. Just like you and your expertise, somebody says, hey, Stefan, I want you to list my house for 0.5%.
Right. Not going to happen.
Say, not going to happen.
It can't happen.
Yeah.
Because I spend good money on photos. I spend good money on marketing, and, open houses cost about $100 a month, or $100 open house. So it adds up, right?
It adds up. You get what you pay for. We're kind of out of time. I have one more story. We don't have to do it if you don't want.
Do it tomorrow?
It's just...
Tomorrow's Wacky Wednesday.
Yeah, we can.
What's the topic?
It's the Z word. The Z word.
Zillow?
No. Hey. Bite your tongue. Well, yeah, it's Zillow. Okay, well, let's just do it. I mean, we're sitting here. Zillow could be crippled by RESPA actions is the headline here.
Yes.
So Zillow has been downplaying the consequences of the CFPB's investigation of its marketing practices. Last week, its CEO said the subject of the investigation would only affect its bottom line by less than 10% in a worst-case scenario. Columnist Ken Henry points out that Zillow's premier agent monthly payments are a critical part of Zillow's business model, amounting to nearly $190 million during the second quarter, just the second quarter of 2017 alone. This represented more than 70% of Zillow's total revenue. This puts Zillow in an awkward position of preferring to settle a fine that leaves the program intact. So even 10%. I mean, if this is primarily their source of income, is charging agents to generate leads for them, which eventually is going to probably, maybe, potentially hurt agents' business. Some people would even argue it may put them out of business with automation and things like that. Seems a bit counterintuitive, in my opinion. Counterproductive, I guess, is the right word. Zillow's having problems.
Yes.
This is why we mentioned a couple weeks ago, Redfin is kind of stepping up to the plate. They're doing their thing, so Redfin may come to the forefront. Seems like you replace one just to insert another. So who knows where that's going to go.
Well, so another that's a little bit better or something. But yeah, it's a good topic.
Oh,
I'm doing Zillow something in September, like the end of September.
Late on the
there's that logo. Hey now.
Yeah, there's the logo. A little late on that one. Hey, we're going to wrap it up for today. We're out of time. Went over a little bit in time. Thank you, everyone, for being a part of the show. We do appreciate you taking time out of your day to listen to what we had to say. Do appreciate that for sure. So we do this Monday through Friday, 9 a.m. Arizona time. So be sure to check out tomorrow's episode, Wacky Wednesday. We have a little fun with real estate, kind of poke fun at ourselves a little bit.
At our industry.
Yeah, and thanks BW, or what's his name, Bruce.
That's Bruce.
Yeah, Bruce, for being in the show.
He probably doesn't want to know that. Maybe he probably wanted people to just call him BW. So he kind of let the cat out of the bag.
Buffalo Wild Wings or something. BWs, B-Dubs.
Oh, I don't know.
B-Dubs.
B-Dubs Sherwood.
Yeah, there you go. Hey, everyone, thank you very much for being a part of the show. Share with your friends and family. Certainly, if you're looking to buy, sell, refinance, or invest in property, we want to be your team of choice. So please reach out to us. We'd love to talk to you and help you with your American dream. So until tomorrow.
And
oh, go ahead.
Well, I was going to say on Thursday we'll talk a little bit. We'll answer some questions on tax liens and buying them and the process for person.
Yeah, perfect.
Or B-Dubs.
Yeah, we'll do that. So be sure to check in with us. Hey, thanks, Brian, for being part of the show. Really appreciate that support. All right, everyone, have a great day. We will see you mañana. Take care, everyone. Bye-bye.
All right, cool.